We are live now, sir.
All right. Good afternoon. Thank you everyone for joining for this midweek market outlook webinar. So first I'll speak about the global developments and what is in store for us over the next couple of weeks. And then my colleague Vinay Rajani will join us and he will talk about markets from short-term technical perspective. So today we had a subdued opening. The US stocks finished higher after a drubbing they got, especially for the Nasdaq stocks. So last 2 days there, it has been good recovery there, and it was supported by the technology stocks. Technology stocks did quite well. The banking is a sector which is struggling there, and the financial stocks stumbled in US. The crude oil also on back of concerns about the demand from China. The OPEC countries trimmed that forecast for the 24 and 25, and that's why it closed at almost 2-year lows. And now the CME Fed Watch tool is suggesting that the US FOMC is increasingly likely to cut. 66% chances that the 25 basis point and some 34% chances that the 50 basis point interest rate cut will happen in US on September 18th. So we are at today at 11th September. So exactly after a week, next Thursday morning, we will get to hear about the what kind of interest rate cut has happened in the US. So today market opened subdued but registered a good recovery, and it was higher in the first half, but again from the recent trend lines we got the supply and markets have closed weak. Most of the sectors are also weak, and currently the advanced declines and other internals which we track are suggesting that this phase may continue for a little longer time. So 1 week time is there. Before that, we will see some volatility because of the lot of money is being diverted to other markets. We saw that the Bajaj Finance IPO is going on right now, and last time Tata Technologies IPO was there, it got about 2 lakh crore kind of subscription. This time, I think this IPO will get about 3.7, 3.8 lakh crore subscription out of 3,500 odd crores which will be subscribed for the IPO. Remaining amount will again be available for the market, and most of that money will again find its way to various equity and other schemes. So huge amount of liquidity which is right now occupied in the IPO will also become available. The recent mutual fund numbers are also suggesting that the liquidity is still there. So that means that the overall we have a lot of liquidity, and that means market should find support at the lower levels. Now let's turn to Vinay. Vinay, can you show the short-term charts and what is happening in the market?
Yes, sure. I hope my screen is visible. Devarsh, is it visible?
Yeah, it is visible.
Yeah. Yeah. So let me start, and yeah, so this is an intraday chart of Nifty. So now this is a 15-minute intraday chart. So as we can see, in the morning there was a muted opening, and after that in the first half Nifty recorded more than 130 points and went up to 25,113. This was the day's high. And in the second half we witnessed some selling pressure coming in, and more than 230 points fall was there in the second half. So we touched a level of 24,885 in the Nifty during towards the end, and the closing was weak. And if you were to go by the daily chart, this daily chart is remained entirely in within the range of yesterday's trade. So basically, Nifty failed to surpass the yesterday's high of 25,130 and actually reversed south afterwards and closed on a weak wicket. But if you were to go by the recent swing low, this is the 9th September low, which was nothing but the 24,753. So this is the immediate support we can see on the screen. This is the daily low. So this is likely to act as a strong support here. And this was the top all-time high was formed at 25,333. So this was almost 600 points fall, and we recovered from the low almost 300 points. And again, today's session was on the weaker side where we saw that advance declined and the other sectors, most of the sectors actually closed on a weak note. So yes, there has been some concern. It is not able to show the momentum on the upside, and somehow after some rise, it is facing resistance and supply is coming at the higher level. So what we believe is that Nifty has got strong support at 24,750, which happens to be the 9th September low. And this is the purple line you can see. This is nothing but the 50 days simple days moving average. So if we go by the history, in the starting of the August month, we witnessed a sharp correction. On the 1st August, Nifty hit an all-time high of 25,078. And from that level, in the next three sessions, it came down to 23,900. So at that time also, this purple color line, which is nothing but the 50 days SMA, simple moving average, acted as a strong support. This was the second attempt. Market was going down at this point of time on 14th August. Again, it found support and supported 50 days SMA and reversed the north. And ultimately, it made a new all-time high of 25,333. So what we have come to know about after this event, that 50 days SMA is a crucial support. And if you were to talk about the current levels of 50 days SMA, it is currently placed at 24,646. And the previous swing high is 24,750. So considering this evidences, we can say that Nifty has got strong support in the band of 24,650 to 24,750. This 100-point band is a crucial support for the Nifty. And if that is breached, then we can expect some deeper correction in the market. And that can drag the market and the short-term trend ultimately will be changed from bullish to bearish. So till then, we can say that we are just consolidating, running correction is going on. So we can say that till this level holds. So 50 days SMA is a very crucial support. Many of the sectoral indices have broken down below this 50 days SMA support, but Nifty is one of the index, the benchmark index, which has not yet broken down the strong support of 50 days SMA. So this is the hope that Nifty should not break 24,650 to 24,750 as a support. If it happens, then deeper correction we can expect, and that would be a sign of caution for the medium-term traders as well. And as far as the resistance is concerned, this is a trend line you can see. This is the all-time high. After that, we made an intermediate high at 25,275. So if we adjoin this downward sloping trend line, that gives a strong resistance at 25,200 level. So this is the strong hurdle for the Nifty. Unless and until we see any sustainable level above 25,200, we should remain cautious. So this is our view. This is a stop loss for the short traders. If 25,200 is taken out, then we can cut our shorts, and again we can expect some resumption of an uptrend. So this is a trigger level for the bears, and that should be watched keenly. So 24,500 is a strong resistance. And again, I'm saying 24,650 to 24,750 is a strong support. And if you look at this oscillators indicators, they're already into a downtrend. So they have already shown a weakness in the current trend of the market. But somehow, unless we see a decisive support getting breached on the downside, we should not take aggressive short positions. So still there is a hope that again in the coming sessions, Nifty could come back and attempt a recovery. But we need to see and follow the levels which I have mentioned here. Now let us discuss the Bank Nifty setup. Now this is a Bank Nifty daily chart. Now Bank Nifty has recently underperformed for last couple of months. We have seen that big underperformance from the Bank Nifty as compared to the Nifty. So this was an all-time high, which was at 53,357. This was registered in the July 2024. And we can say that Bank Nifty is still down by more than 2000 points from its all-time high. So overall underperformance was there. And today also in the expiry day, we witnessed some weakness throughout the session. So this is a short-term trendline resistance. This was the intermediate high of 51,750, which was registered on 3rd September. After that, it attempted another recovery wave, which made another lower high. This was 51,636. So this adjoining these tops, we get a strong resistance of this trend line. And we can see that today's high was almost at that trend line. And after that, Bank Nifty plunged in the intraday session. So this is the level of 51,420. So in the coming session, we need to watch this level. If 51,420 in the spot Bank Nifty, if that's taken out, then we can expect short covering to come in the Bank Nifty. And that is a strong resistance as far as the short-term trend is concerned. So 51,420 is a strong resistance. And as far as support is concerned, we believe that support lies around 50,700 to 50,800 band. So this is important observation on Bank Nifty, and that levels should be on radar for taking a directional view on the market. Now let us discuss a small cap and broader market. So now let us look at the Nifty micro cap index chart. So this is nothing but the small cap and broader market benchmark, which gives an idea on how overall market breadth is doing. So this is a daily chart, and we can see that this index is comfortably placed above 50 days simple moving average. So that means outperformance was there and strength is still there. It has not broken down. But if we go by the recent history, after 22nd August, Nifty microcap index has not gone anywhere. It has actually taken resistance multiple time around 5,400. This is the index level of Nifty microcap index. So it has not been able to cross this strong hurdle, which is placed at 25,400. And this is a pure consolidation which is going on since 22nd August. So almost we can say 15 to 20 sessions have gone, and microcap index has not moved at all. So it is not falling also and not rising also. So pure consolidation is going on. But the way Nifty is going on, Nifty is taking actually lead in the downward market. If Nifty and Bank Nifty keeps on underperforming and keeps on going down, then microcap and small cap index will come down, and it takes only 1 or 2 days to break down the entire trend. So this is a range of microcap index, and that needs to be tracked. And any level below 24,500, which is almost 2% away from the current level. So if Nifty microcap index breaks by 2% from here, then the mid cap and small cap indices will also start at their underperformance. So this is the hope, and this support needs to be tracked. Now, let us look at a small cap index. Small cap index is also holding above the 50 days SMA. The same scenario like micro cap index, it is into consolidation. There is no breakdown. It is still holding well. And level around 18,900 in this Nifty small cap index is a crucial level, which is nothing but it's just 1 or 1.5% away from the current level. We need to see whether these levels are holding or not. 9th September low is a very strong support for the small cap index. So far, we can say that small cap and broader markets have been outperforming. But if Nifty breaks the crucial support, which we have talked about, which is nothing but the 24,650, then small cap and broader market will also catch up the downward trend. So that's a concern for the market as of now. And we need to see how it goes in the coming session. So only on the basis of today's session, we cannot say that market has reversed on the downside. Still, there is a hope, and we will review our positions as per the levels that we have mentioned and discussed. So this is what I wanted to share, and levels I have already shared. So again, I am sharing for Bank Nifty 51,420 is a strong resistance. For Nifty 24,650 to 24,750 is a strong support, and 25,200 is a strong resistance. So we are consolidating in this range, and unless we get a breakout on the either side, we will not take a directional view. And looking at the chart and looking at today's movement, it looks like that short-term traders should remain cautious, because there are some signs and indicator oscillators that we have been tracking have started weakening on the short-term chart. So a bit of alarm, early signal of market weakness. Let's see how it goes in the coming sessions. We will definitely come out and review our positions. But as of now, the only final advice I would like to give for the session is that one should remain cautious in the market, and levels that we have mentioned that needs to be tracked and followed on a strictly basis. That's all. Over to you, Devarsh. We can proceed for the question and answer.
Yes. So thanks everybody. If you have any questions, you can put it into chat window and we'll try to answer. So Bala Gangadharan has asked, can you please explain the details how US markets cut impact on the Indian market? So there are two big impacts. First is if interest rates are lower, especially in the US treasuries, that means that that kind of flow which can come into the emerging market and India can become a beneficiary of lower interest rates from the flow wise. From more longer term fundamental perspective, the US reduction of interest rate will result into a lower interest rates in India also. And as interest rates come down into India, the cost of capital comes down. That means the profitability of the companies who have debt, or the entrepreneur who wants to invest for a longer term, if the capital is available at a lower cost, they can expand their business, and that leads to expansion in the economic activity, which helps the growth. So whenever the growth concerns are there, central banks, especially the one where recession fears are there, they reduce their interest rate quickly in order to support the economy. So lower interest rates over a longer term leads to growth. Okay. I don't see any other questions. All right, so that's it for the today. Thank you everyone for joining. We can close the webinar.